Good afternoon. Can't believe it's 2:10. How time flies when you're having fun. Um, we've got a higher high and a higher low on the E-mini. And this favors buying into weakness to retest the high. We have taken out the preceding high at 92.50. That's pretty darn good support. So if the market comes back down and retests 92.50 and can take it out, the breakout will be confirmed, and while you may not bring in fundamental buying, you'll bring in technical buying and high frequency buying. So the market is still pointed higher. If you have to make a trade at the market, you would do it from the long side. Taking a look at the F2 screen, which is a B pattern, and a B pattern back in the old days, every market profiler in the world would have been frothing at the mouth just trying to get short. And in an up market, a B pattern means profit taking, and we're close to one of those very, very round numbers, 1900. And some folks that have been along for the ride in anticipation of getting to 1900 right up here have taken profits today, and that yields the B pattern. So we've got our breakout from 92.50, which is pretty much the day's low as it stands right now. We'll assume a close at 93.25. Last trade. We've got resistance at 98 to 1900, so that's sell 1. We'll make it 3 to 5 for sell 2. Quite often the market goes past a huge market number like 1900 is, and it'll go to 3.5, and then we'll make 8 to 10 for sell 3. The forecast from day one of this year has been 1900 plus, and we're almost there. We didn't quite make it, and the reason we haven't made it so far has been long liquidation or profit taking, in my opinion. On the volume area from the preceding day is in the 89 area, so this 90 area, say 91 to 89, will be buy 1. Maybe let them get stops below the overnight session, below today's day session low. Spook the length and then come back and take it to the long side. And then we'll play 85, 87 for buy 2. But if you're a fundamental player, it's really, really hard to get long based on this morning's fundamental news. If you're a technical player, you've got a lot of reasons to get long. And we'll see who wins this battle. Right now, the Fed wants the market to go higher. So the easiest trade to see is selling failure to take out today's day session high. Selling failure to take out 9800 to 1900. Then the second trade would be the 03 to the 05 area. Okay, the note, the financials can trade higher when the E-mini is trading higher. Last fall we saw that. That was because of the taper. Whether they would taper or they wouldn't, the same euphoria, the same amount of money was supporting both markets. So when taper was off, both markets would rally. When taper was on, both markets would sell lockstep. Okay, we had by a tick a lower low in the overnight session market, and we didn't quite make yesterday's 6. So we've got an inside day, and that favors a trading range. The support area is in this 124, 12 to 20 area, and resistance starts at 6 to 8. So we're holding the upper edge of the range. We're at the top end of a trading range, and we've got to take it out to hold the length in their positions. The fundamental news is such that financials did trade higher today. Big miss in retail sales across the board. And remember, the financial meme has been lousy weather is the reason for all the poor economic performance in the first quarter. And growth would come roaring back in the second quarter. Some news says we have growth. Some news says we don't. So the news has been mixed on this front. On the basis of headlines, almost every expansion on those headlines, where did those numbers come from, show a considerable economic weakness. Here's resistance at 5 to 6. We're there. We haven't in the last 6 months traded above 125.06. So we've got resistance at basically 4 to 6. Then we'll make it 8, 12, and 16. And the easiest trade to see is sell failure to take out 4 to 6. On the buy side, the last rotate down basically stopped at 125, so getting stops below 125 is a play. So we'll make buy 128 to 125 even, maybe a little cute. You really want to be in the market, and this is on the assumption that the E-mini doesn't really sell. Then 125.01 is what it'll take to get in. Then we'll lower our next buy down to 21 to 25. But we're just in a situation where this market is pointed up for the right reasons, in my opinion, fundamentals. And the economic story coming out around the globe is not uniformly to the buy side. In fact, if you read beneath the surface, it's pretty weak economic numbers. Okay, looking at the F2 for the 30-year, the knob spread widened today. And again, we've had, even when the knob spread starts to sell, it's usually good for 2 points. We get about a 1-handle pullback in the knob spread now from profit taking, and then the buyers come right back in. So the long-term fundamentalists is long the 30-year and short the 10-year, because their feeling is that interest rates are going lower. And EB, based on the economic news, they've got a point. So right now, selling failure to take out this 136, 136.04 area is the easiest trade to see, and the 04 comes from over here. And we are at 136 right now, so this is our sell failure zone. Then we have rejected prices above 13, so we'll make 7 to 11 sell 2. And the knob spread's a little showing strength, so we'll make 24, 28 for buy 1. May have to pay 29s to get in. And then we'll make 17, 22, 17 to 21 for buy 2. So the financials are looking pretty good. Okay, gold was pretty quiet. I don't think a lot has changed right there. We've got a seller above 1,300. We've got a buyer below 1,290. And that's probably not going to change. I don't see anything fundamentally that's going to change G20 from printing money when they need to. and on a regular basis because they need to on a regular basis. So that'll keep those that are buying because of financial shenanigans in the game. And then there's a possibility that things can heat up in the Ukraine again. And so you can see right here this 1303, 1305 is pretty good resistance, and on the support side this 85 area is pretty good. We've got really good support here, and then definitely we have rejected prices below 80. So 80, 85 is really good support, and on the resistance side this 1300, 1305 is where we are. We're right in the middle. In the 94 area, so we'll make 88 to 90 buy 1 and our 85 plus or minus for buy 2. On the sell side, we're going to make it 98 to 1300 for sell 1. Then 03 to 05 for sell 2. Pretty much where we've been. And the reason it's pretty much where we've been is because that's where support and resistance are. Pretty hard to fight the logic on that. Okay, crude oil. We'll take a look at the big picture on the crude oil. We'll go to the F1 screen. We've been trading up since 99. Crude moves in $2 to $3 increments, so that makes 102. 102 plus, near resistance, barring war. And you can see that the selling came out of that 102.25 area. So we got 102, which is what we're close to right now, and then 102.25, 102.50. So market's been trading up. We've got a pretty good move, making up to 102 is our $2 to $3 range when crude settles in. So that's not too difficult to call. And pretty strong buying, as you can see. So we'll make 102, let them get stops above 102, 102.25, sell 1. And then 250, 275, sell 2. And on the buy side, this move came out of the 30 area, so we'll make 25.50, buy 1. Pretty aggressive, but that's where we are. And then 101, 175 for buy 2. And the start of driving season is about to come up right now, so there's some seasonals that are involved in this too. Seasonals really drive a lot of the trading, and the way they'll drive the trading is they'll do it. It's done through spreads. Remember, 75% of the money that's put into the market is done on a spread basis, and that reflects the fundamentals. And most people that are in any given industry are fundamentalists to the core. I mean, they mine iron, they raise cattle, they pump oil. They are long treasuries in their portfolio. They understand that. And so one way to play that and not get caught up in the volatility associated with outright owning contracts outright is to do it on a spread basis. And the fundamentalists have learned that a long time ago, that you can get your head handed to you in futures, and you got a lot to put up with. A lot of time it's just random order entry. So let's do it on a spread basis. The euro is lower and it's pointed lower. We got this attractor down here at 75. Think we can trade lower, so we'll make 75 to 85 buy one. I do think we're headed lower. And then we'll make 40 to 50 for buy two. Last rotate up stopped at 10, so we'll make our 15 to 25 sell one. And 40 to 50 for sell two. Can't imagine anything Draghi would say that would rally this market, if you know what I mean. His job is to talk this baby down. So trading from the short side could be a little more aggressive on that if you wanted to. 37 obviously is a round number, so something above 37 would work. And remember on the long-term chart that we did earlier that we were looking 135 is the structural support for this market. That's all I have for May the 13th. We'll see y'all bright and early in the morning, 6:45 Central. Hope you have a great evening.